The market giveth and the market taketh away. Craig Bolanos joins us now, a co-founder and wealth advisor at VestGen Wealth Partners. Craig, your blood pressure doing okay today, bud?
Oh, John, listen, I always love the conversation with you. I don't necessarily enjoy the outcome. My blood pressure's going to be fine.
Yeah.
You know what? It's been quite some time since we had a 5% pullback in broader indices. I call this a dip. That's what it amounts to, and people should just know it's a normal part of the investing process.
Yeah, I feel okay until I don't, right? Like I feel like there's nothing, and correct me if I'm wrong, Craig, nothing fundamentally all that different than a week ago or 2 weeks ago. So in that way, I feel good about where we are. But these things have a way of kind of unwinding themselves and reframing the story of the day, don't they?
Well, no, they do, and let's understand what's happened. Today, the Federal Reserve cut rates for the third time. We had a rate cut in September, another one in November. We got a third cut in the month of December. But the Fed altered their language and said, hey, everybody, for 2025, we know we said there would be 4 cuts in 2025. Then we told you there's going to be 3 cuts. Now there's only going to be 2 cuts. But let's understand why there's going to be less cuts. There's going to be less cuts because the consumer is strong. Think about the spending on Black Friday and Cyber Monday. There's going to be less cuts because employment and jobs remain strong, which means wages remain strong. So while this is negative news for valuation, it's a good confirmation that the Fed achieved their goal of a soft landing.
Yeah.
So that's the lens you got to see it through.
Yeah, I agree. And I think that sometimes we equate the market with the economy. And of course, we've talked about how forward looking the market is, and also how a market rises maybe a little bit faster than it should. And a dip in the market is simply coming back to the reality that exists right now.
That's correct. We're simply repricing expectations. The stock market, as you so eloquently said, John, moves relative to expectations. John, how often do we see a company put up good earnings, but then the stock goes down the same day of the report?
Right.
Why? Because if people expected it was going to be fantastic earnings and the earnings only turn out good, that means it's less than expectation. In the same way, everyone wanted 3 cuts on the dot plot. It looks like we're only getting 2. Hey, markets need to reprice to reflect the new reality.
I'm curious your take on this. I heard in the lead up to all of this that Jerome Powell, they'll still cut rates today, even though maybe there were some data points out there that indicated maybe they could just do nothing this one. Someone was saying, oh, Jerome Powell would not cut because he wouldn't want to shake up the markets right before the holiday. But I feel like that is not what he cares about, to be perfectly honest and blunt about it. And it's evidenced by what he said. He came out and said exactly what they thought, 2 more cuts. And I'm sure, Craig, that Jerome Powell knew that that would shake the market.
I think he knew it was going to shake the market, but in the same way, there's a difference between shaking up the market and shaking up the wealth effect. The wealth effect matters. When people feel wealthy, they tend to spend. When business owners feel wealthy, they tend to spend. So shaking up the market and protecting the wealth effect are 2 different things. And don't get me wrong, John, today was a hawkish cut. I call it a hawkish rate cut. Stronger expected growth married with higher anticipated sticky inflation. I think all that means is the Fed has now officially transitioned to the pause, right? That's where we're at. We're at the affectionate pause, and investors should start thinking about what does it mean to invest through a Fed pause.
For me, no one's been able to explain it perfectly to me, and I'm sure there's a great answer why, but you and I and others have talked about, even used the phrase Goldilocks over the last couple months to describe what's there. Doesn't that mean you don't do anything? Well, why do we even have rate cuts to begin with? I know it makes some of us feel better on the margins, but was it just because it was so built up for so long that they felt like they had to release some of the pressure from the balloon? Like when the market or when the economy, jobs numbers, the inflation numbers overall doing really well, why tinker with it at all?
You know what? The jobs data is fantastic. The inflation data has been good until the recent uptick in PPI. You could make a strong argument, and one Federal Reserve member did dissent today and said we shouldn't cut rates. But I defend what the Federal Reserve chair did to preserve the wealth effect going into the end of the year. John, you and I have said before, this is a very difficult needle to thread. And one of the things that the incoming administration should remember is the porridge right now is not too hot. It's not too cold. The porridge is just about right. So you don't want to tinker with it, if you get my drift.
Mm-hmm. Craig, a co-founder and wealth advisor at VestGen Wealth Partners. We talked last week about the exciting new news of what you have. The website is getretiredstayretired.com, where people can go for more information. And Craig, yeah, I imagine that today's news hits people differently depending on where they are in terms of their retirement journey. And I imagine that's the customized approach that you guys want to provide with people at VestGen. You can talk today to a 35-year-old differently than you can to someone who is already withdrawing from their retirement accounts about what's happening. And that's the whole goal of what you guys are doing at VestGen.
That's just it. You know, everyone talks about guidance and service, but let me be clear. It takes a dedicated team. Yes, not an individual. It's a team of experts where the success lies in personalized service that begins with listening. But then you can't just have strategies. You got to have innovative strategies and, above all else, an unwavering commitment to put the client's interests first under that fiduciary standard to achieve each and every one's unique financial journey. And that's what we're redefining. That is the hallmark that is VestGen Wealth Partners.
You guys do great work. GetRetiredStayRetired.com is where we can go. Any last thoughts as we head to a break, Craig?
Yeah, I think before we come to a break, I think an interesting question for investors is the Trump trade dead, or is the Trump trade still alive? I mean, that move to cyclicals from tech, that's something we can talk about coming in from commercial if you want, John.
Well, actually, Craig, we're out of time for me and you today, but how about we table that for 2025? I know we'll be chatting throughout the year then.
We'll table that for 2025. John, I got to tell you, time flies when I'm having fun. Thanks for booking me on tonight.
Absolutely. GetRetiredStayRetired.com. Craig's the best. Take care, Craig.
Be good.
We'll take a break, and then, fortunately, no more Craig. But we're going to move on to some other great stuff.